All right, let's talk about Schedule A. Schedule A is optional. Every taxpayer gets a standard deduction of $12,400 or $24,800 if you're married filing jointly. Standard deduction can be used to reduce taxable income, which means it's tax-free. However, if the taxpayer has itemized deductions that are greater than the standard deduction amount, they're allowed to elect to itemize and fill out a Schedule A. Doing so shows the government which expenses you have that add up to an amount greater than the standard deduction that you're allowed. Here are some of the expenses that are most commonly used when itemizing. Medical and dental expenses. Now there's a caveat. These expenses do not directly reduce your taxable income. To qualify for this deduction, you must have medical and dental expenses that exceed 7.5% of your adjusted gross income. As an example, if your AGI is $100,000 and you have medical and dental expenses exceeding $7,500 of out-of-pocket and unreimbursed expenses, then you qualify for the deduction on Schedule A and get benefit for every dollar over the $7,500 that you spent. So, depending on your circumstances, this can be very valuable for some taxpayers. Taxes you paid. While you don't get a deduction for taxes that you've paid the IRS, federal taxes, you do get a deduction for state and local taxes that you paid during the year, as well as any real estate or personal property taxes that you've paid. Unfortunately, the total amount that you can deduct for all taxes you've paid is $10,000 for single and married filing jointly couples. Married filing separately filers are limited to only $5,000. So even if you paid $8,000 of real estate taxes and $3,000 of city and state income taxes, you can only deduct $10,000 or $5,000 depending on your filing status. The extra money you spent doesn't count towards your deduction and it's essentially gone forever. Interest you paid. Mortgage interest you paid during the tax year on your primary residence can be deducted on Schedule A. Mortgage interest paid towards your rental property or a property related to a business is reported separately on the books of the entity, or in the case of a rental property, on Schedule E of the tax return. Gifts to charity. Cash to 501c3 charitable organizations are allowable itemized deductions. This does not include GoFundMe or any other donation sites. However, you can also donate non-cash items such as clothing, household items, art, stock. These are all reported on line 12 of Schedule A. But if the donation was over $500, you must fill out Form 8283 to detail out when you acquired the goods being donated, what you paid for them, when you donated it, and who you donated it to, and how much it was worth when you donated it. Casualty losses. This is only applicable if you suffered a loss from a federally declared disaster. And with that, you must also attach Form 4684 scheduling out the property, when it was acquired, the cost basis, insurance reimbursements, etc. Once you total up all of those allowable itemized deductions, if they're more than the standard deduction that you're allowed, based on your filing status, then you're allowed to use